Okay. All right, guys. So apologies for that. So basically, what happened is we so on my Telegram I did put that we September 3rd or September 4th that we are going to witness 3 rate cuts this year, and a lot of people thought that maybe I am probably out of sync with what's happening on the inflation and job market, and I gave my thesis last time. So I'll come back to that one. So the summary of economic projection shows higher GDP and core inflation forecast for 2025 and lower unemployment projection. And that's what we discussed last time, underscoring a mixed signal behind the cut. So basically, there is a split in the Fed, and we will talk about that, why there is a split in the Fed, right? Fed views and votes are highly dispersed. SEP, Summary of Economic Projection, median mask wide disagreement among Fed members. So some favored no rate cuts, one favored tightening, and one favored much larger easing. That means one was for favoring 50 basis point cut, some were favoring no cut, and some were favoring a little bit tight, like basically increase in the rate cut, right? So their uncertainty beyond 2025 is substantial. A new Fed chair is so the current Fed chair Chair Powell is going to retire. His term ends in May 2026. So there will be some board turnover, political appointments, non-automatic renewals of regional president could materially shift policy direction in 2026 and higher, 2026 and further, right? So there is a split in Fed, and I'll give you the reason why there is a split. So if I go to the next slide, US has massive payroll benchmark revision in the past few years. But if you see in 2025, they had from March up till today, there had been a 911,000 revision on the job since March. So they do the revision in every non-farm payroll. They have room to do the revision for the previous one. So this is the largest revision that has happened this year, right? So they declared, say, like 300K creation of the job, say, for example, last month, and then they said, no, it was not 300K, it was 175K. So that is one thing, that the job market is cracking. But on the other side, if you see the US core CPI was accelerated 0.3%, matching the biggest climb since May 2023. So inflation going higher, job market going down. So Fed has two tasks. Fed KPI, key performance indicators, are to make sure that the job market is stable and the inflation remains within control. So now I hope I'm able to explain to you why there's a divide in Fed. This is the divide. Job market is going lower and the inflation is still staying sticky, a little bit sticky. Right? So let's go and let's look at, so this is the interest rate probability. And this interest rate probability suggests we have next meeting in about 40 days from today. So 29th of October, we have next meeting, and the rate cut by 25 basis point is 91.9% at the moment. So market believe 91% or 92% of the market believes that there is a rate cut because Fed has indicated that they're going to do 2 more rate cuts. But there will be some change in this number. This number will, I believe, will come down. We will have a rate cut, but there will be, we have no, from now until next meeting, we have about CPI number, we have non-farm payroll number, we have, what do you call it, PCE number, which is the Fed main barometer for the inflation. So this number will change, but again, most probably Fed is going to go for a rate cut again this year in October, 29th of October, right? And for the December, there's a 78.6% probability of the rate cut. Right? So let's move further. Now, I showed you this chart last time, and my observation or my research suggests that whenever the rate has broken 4.5%, it has not stopped. We have seen this one, we held this level, we went higher. We dropped through 4.5%, it has gone down on an accelerated pace. We held 4.5%, we moved higher. Same thing here. We broke through 4.5%, we are now 4.2%. We are on our way to somewhere around 3% over a period of maybe sometimes in 2026. I think Fed has acknowledged that they're going to cut the rate, and we'll see more cuts next year, right? At the moment, Fed suggests that there will be 2 cuts this year and 1 cut next year, right? So we'll see how it goes. But my research suggests that we are coming down to at least 3.5% in a matter of a couple of months, right? So that's what my chart is suggesting. As I said, it breaks 4.5%. If it holds 4.5%, we go higher. Break 4.5%, then there is no stop in the downward in the easing cycle or rate cut cycle. Okay, let's move further. Now,
So we have one question.
sure.
Fed cuts which rate and what BPS stands for?
So it's
Basis
basic,
point.
yeah. So it's 25 basis points. That means quarter percent. So that's the thing. And Fed cuts the interest rate, which is
And what
the
is rate like Fed cuts?
Fed cuts the interest rate, which is the lending rate between the Fed and the banks. So basically, where the central bank is the resort of last, is the last resort. If you're not able to. So bank do what does bank do? There's the interbank market. So if I'm not able to borrow in the interbank market, I'll go to the Fed and I'll borrow it through. So Fed cuts the rate between banks, which Fed cuts the rate which it lends to the banks, right? So Fed lends money to the bank, and Fed also do the repo. So if you understand the repo market and reverse repo market, that is what the rate is, right? So let's come back to what is now the recession probability. There is a divergence between the stock and bond market. The stock market in April 2025% was showing more than 50% probability of a recession, right? In September, it is close to zero. So the way stock market is going, stock market is seeing no recession is likely to happen soon. While the US Treasury market in April, it was around 30%, but in September, it's expecting more than 40% that US is going to see the economy is going to see the recession. Okay. So this is just, I got it today. So US Treasury just hit 40% probability of recession, most likely in 2026. It doesn't give you what the time frame is, but the expectation is gone higher, right? So that's where we are. Now, let's look at the US core inflation and consumer confidence. So the one which is in the orange line is the consumer confidence, right? And the one which is in the basically 1 second, I have okay. So okay. And the consumer confidence. So basically the core inflation. So the consumer confidence was higher. Now it's getting flat, while core inflation is slightly going down, right? And this will give power for Fed to increase the rate, to decrease the rate, right? So that is where the US core inflation and the consumer confidence stands at the moment. Yeah. So 1 second, guys. I think just a second. Okay. Right. Core inflation. Sorry, guys. 1 second. I have this. Okay. So the yellow line and the orange line is, sorry, my mistake. So ignore this one. The orange lines is the core inflation. Sorry, core inflation. So guys, there's a mistake here. Core inflation is going higher. Sorry. So the orange line is the core inflation. The core inflation is going higher and consumer confidence is going lower. So ignore this, please. So core inflation is going higher, consumer confidence is going lower. That is the challenge which Fed has, right? So I'll correct the slide. I'll correct the title. So the core inflation, inflation going higher, consumer confidence going lower, which is a challenge. As I said earlier, that inflation is the challenge for Fed, right? Let's move on. Saudi Arabia interest rate. Again, this is the interest rate which SAMA lends money to the banks. Right? So this interest rate has come down to almost 4.75%. In the past, 4.5% has been a significant level. It breaks through 4.5%, then you see that it does not stop. It stops somewhere around 3.75%. So if Fed is going to cut two more interest rate, SAMA will, it's a peg currency, SAMA will follow the course. So, if Fed cuts 25, 50 basis point, this rate will be somewhere around 4.25% by the end of this year. But I see that Saudi SAMA interest rate will come down to somewhere around 3.75%, right? Because whenever it breaks through 4.5, then we do not have any room until, you see, last time we found some flatness here around 3.76. That is what my research suggests. Okay. Now let's look at the CPI. One second. Okay, yeah, this one is correct. So yellow line is the CPI, Consumer Price Index, right? And then inflation. So Consumer Price Index has dropped drastically. I am not sure what is the reason, but that is what I have seen. Consumer Price Index has dropped, and inflation is picking up a little bit, right? But in the case of SAMA, because of its peg currency, SAMA will follow what Fed does. If Fed cuts 25 basis points, SAMA will cut 25 basis points. So there is a slight spread between Fed and SAMA. Let me go back to the previous slide. So it was 4.75% in the case here. Yeah. And in the case of US, we are almost 4.25%. So there's slight spread. Saudi Riyal offers a little higher rates than, what do you call it, US dollar, right? Okay, one second. Okay, so that's where is our economic part of what I wanted to show you on US economic indicators and Saudi economic indicators. I could not find a lot of Saudi economic indicators because it's not being updated for a very long time. Most of them come from statistics department of Saudi Arabia, and some of them comes from SAMA. Okay. Uh, and
We have
sure,
one question.
sure, sure,
Yeah.
sure.
So I mean, the question is, if these days the liquidity in Saudi Arabia of the banks are shrinking because of the more projects or development due to different VN 2030 and then VN 30 2034.
Right.
So I mean, if in Saudi Arabia the rates are going to be down, so
Right.
how it will impact along with the liquidity problems?
Now, actually, one of the things which I read, I think Saudi Arabia is issuing sukuk, this US dollar sukuk, about $10 billion, right? Now, that is
Mm.
suggesting that
Oh,
there is some shortage of liquidity, but with the high profile projects going on, yes, a lot of liquidity is being taken over by, I think it's PIF, Public Investment Funds. They take because they are managing most of those projects, right? I think the liquidity crisis will be taken care by the bond where they are floating. So I
mhm.
think if PIF will actually access that bonds, so PIF will have access to that liquidity, and I think they will maintain, bank will be able to provide liquidity to corporates. This is my opinion. I haven't read a lot about it, but I know that Saudi Arabia is issuing 10 billion worth of US dollar sukuks. It was last week. And I think the pricing has been already, I think by now the pricing should have been set. It was on 17th of September. So I think liquidity crisis will be taken care, and that's the reason they're going into sukuk. They're floating the US dollar sukuks.
Okay.
Right?
Yeah.
Any other question on this topic, guys? So then I move forward, and then I will actually, I'll give you a little bit background of what triggered me to get into, found this TWT learning. So if there's no question, then I'll get into it.
Yeah, if
So guys,
someone has a question,
sure.
you can raise even
Yeah,
your hand.
for economic, yeah, okay. If there's any question, guys, sorry, Sulman, to apologize for that. So you can guys put it in the chat box, and then we will address those at the end. We'll have a Q&A session. Okay. Okay, so guys, what happened was like I've been training the professional users in my career with Thomson Reuters, and when I left Thomson Reuters, I started my own trading. So I am basically a full-time trader, investor. I manage my own funds. I do day trading and all. So some of my friends, they came and they said, why don't you train us the way you used to train the professionals? So I came up with this. I am the founder of TWT Learning. I started this project in 2021. I had also an opportunity to be with you guys in, I think, late 2020. Salman was the, I mean, thanks to Salman that I did my presentation in 2020, I think late 2020. So basically, I came up while working with Thomson Reuters, I came up with a three-dimensional approach, which I did used to do with Thomson Reuters as well. You need to have a plan, a strategy, analytical technique. You need to understand the market psychology, human emotion, and it comes down to money management and trade management. Plan your trade, trade your plan. That's what one of the rule we follow in TWT Learning. So I provide education and training in financial markets. I'll give you a little bit detail as we move forward. So the plan, the strategy which I follow is I call it high probability trade setup. So my high probability trade setups are 80 to 95% of the time correct. I look at the seasonality. I look at the seasonality, economic indicator, fundamental indicator. If all comes to agreement, then I take a position. Right. So this is the three-dimensional approach, and I provide training on these three-dimensional approach. So these are the rules which is generally we follow those. Market is always right. Market is the master. Market is the king. You have to follow the market. In case of confusion about the market, go back to rule number one. Market is always right. Right. Market can remain irrational until we can remain solvent. Right? If you fail to plan, you plan to fail. Plan your trade, trade your plan, trade what you see, not what you feel. So I use technical analysis as one of the driver of my analytical strategy. So technical analysis, I use key tools to identify markets, technical patterns help in clearly finding continuation reversal patterns, indicators, and I'll give you the next part, which we are going to cover on the currencies and gold and all. I'll show you my technical patterns over there. Technical patterns help in clearly finding continuation reversal patterns. Indicator highlight the extreme level in price and identify crowd behavior. Combining price action, patterns, and indicator pave the way for a robust trading plan and strategy. And that's what I provide education on. Okay. Seasonality. So I am a very strong believer of seasonality. Every fruit comes in a season, right? So we dress up season-wise. We wear warm clothes in winters, we wear light shirts in summer, and those type of things. So this was the research done for 200 years. Seasonality has performed the best in the multi-asset class portfolio. Right? Then trend. Trend is technicals. I use the combination of these two. Right? Let's get into this. Okay. I like these quotes to share. Education is not the learning of fact, but the training of mind to think. And education is the passport to the future. For tomorrow belongs to those who prepare for it today. I love this one from Muhammad Ali Jinnah. I do not believe in taking the right decision. I take a decision and make it right. So there is no right and wrong decision at the time you're taking it. Time proves it whether you have taken the right decision or wrong decision. But when you've taken a wrong decision, correct it. And this is from Muhammad Ali. I hated every minute of training, but I said, don't quit. Suffer now and live the rest of your life as a champion. So these are lovely quotes. Right? Okay. We provide as a TWT Learning. I provide a 4 months mentorship program. Learn to invest and trade like profession. professionals. We cover futures, options, stock screening, high probability trades, fundamental price action. So it's a full basically 4 months mentorship program. Anybody, those interested, they can reach out to me. This is twt.learning.com. This is my cell phone number, 647-955-6837. You can WhatsApp me, text me, WhatsApp and text me on this one, right? So let's move on. What other services we provide? So, guys, I am available. Follow me on my TWT Learning. I will show you around the Q&A. I am on Twitter for last 1.5 years. I provide actionable ideas on Twitter, especially to the US stock market and the economic indicators. I'm on YouTube. I do every week one YouTube from the market. You can reach out to me on admin@learning.com. I am basically contributing analyst with investing.com and fxstreet.com. These are the links. We provide the following services for covering for these assets to corporate and family offices, anything on FX, interest rates, stock market, North America, GCC, crypto market. Or for individuals, I have portfolio advisory service and private trade idea group, along with the education I provide. So let's move further. Now, let's look into the US dollar. As I said, that I am I strongly believe in technicals, market psychology, risk management. So I showed you this chart last time that the US dollar index. Now, what is US dollar index? US dollar index is a combination of these 5 currencies, where the highest weightage is to Euro 57%, Japanese yen has 13%, almost 14%. Pound sterling has about 12%, Canadian dollar is 9.1%, Swedish krona is 4.2%, Swiss franc is 3.6%. So these are is a weighted index, and these are the weightages of currencies. I showed you last time that it will go down to 96 and will come back. Now, even after the rate cut, everybody was expecting. See, the U.S. interest rates are still higher compared to the globe. U.S. interest rates are still 4.25%. So that's why the U.S. Treasury yields are higher, right? So if you invest in the U.S. Treasury, you will get the best yields at the moment, right? So that's why I said that U.S. dollar is going to remain between 96.00 to 99.6, almost 100, right? And that's what we have seen after the rate cut. We did drop a little bit. At 96, we are on the way back to 100. And this is the range for now, but it's in the downward trend. I still think that it will go to 100. So dollar will be stronger in the coming days. And I'll show you on euro and individual currencies. I know in the Middle East and GCC and Saudi Arabia, mostly the finance, CFOs and treasurers are exposed to euro, sterling, yen, and Swiss franc. Those are the 4 major currencies, and we'll go through it. So I believe the dollar is going to be stronger in coming weeks, but before second rate cut for this year, it will be softened a little bit. Okay, let's look at euro. Euro, this is the euro weekly chart. Euro had failed since 2017, almost from 2018. Every time it has gone into 122, 125, it failed to break. We have failed here, we failed here. We have a similar situation. Again, this is a high probability. We have a similar situation around 117, 118. This line is containing around 118, 119. We fail to break 118, 119. We will see a dip, and then it will be a very sharp move on the upside. Now, if you see it technically, again, it's a potential, it's a high probability. Technically, it's making an inverse head and shoulder. There is a high probability of making an inverse head and shoulder. This is the left shoulder, this is the head. And if everything, the way my research suggests, if it dips down, then we have the right shoulder in the making. Once right shoulder is completed, euro will be way too stronger. Right, guys? So this is on euro. Let's look at sterling, GBP. GBP since 2021 failed to break around 140 level, around 140, 43, right? We have come across the same trend line, which is holding on the upside. There is a probability of GBP coming down, but there is one key issue is Bank of England is not decreasing the rate. So the rate differential may, at the moment, US is in the easing cycle, decreasing the interest rate. Bank of England kept the rates steady. So they have come to a situation where probably they're not going to cut the rate. So there may be a probability that sterling may not drop that hard. But looking at technically, it seems like high probability setup is if sterling drops, sterling can drop back to 130, 1.30. So it's 1.34, almost 1.35. So it can come down to 1.30, but I don't see a significant drop in sterling. Time will prove. We'll see how it goes. We break this trend line, which is, I would say, it's around 138, 139. Then there is no tomorrow. Then sterling will fly, right? Let's go to Japanese yen. So as I said, that overall dollar looks like it's in the uptrend after the rate cut, because from now until next rate cut, we have 40 days. Okay. So in 40 days, I think Japanese yen is going to go higher to into 150s before it. So it's making, if you look at the shape, it's making a descending triangle. So it's going to hit somewhere around 150 before it goes down. Once it breaks this base, which is 140, then Japanese yen will be way too stronger. And then Bank of Japan in their last meeting, two board members have favored a rate hike by 25 point quarter point, which is meant 25 basis points. Right? Now 25 basis points. Last time they increased by I think 11.5 basis points or 12.5 basis point. That created a havoc in the market because Japanese currency has been used as a borrowing currency. And I have seen in Middle East a lot of, I mean, I used to be there. A lot of corporate, they like to borrow in Japanese yen because it's the cheapest interest rate, convert it into dollar, and then use it for that, for their projects, expansion, capex, or even for trading. If Japanese yen becomes stronger, you can understand what will happen to the global market. Even in globally, it's known as a carry trade, interest rate differential trade. If Japanese yen interest rate goes higher and Japanese yen becomes stronger, there will be a lot of hit, which fund managers, even fund managers borrows in Japanese yen, convert it into dollars and invest into treasuries, make a higher yield, take the differential of the interest rate, make a higher yield, put it into stocks. So these will unwind. If that unwind will happen, there will be a large shift in the sentiments of the global stock market, global currency market. So we'll see what happens. But at the moment, as I said, the dollar looks stronger. There's a possibility of dollar yen to go higher. In the case of Swiss franc, same thing, dollar Swiss. It's like around 0.79 or 0.79 at the moment, has room to go to 0.83. Same thing in the same trend. The dollar looks going higher. Before it hits, once it hits 83, it will, in my best opinion, it can remain between 0.84 to 0.78, a range trade sort of a thing. But it has broken a very key support line. Right? Okay, let's go and gold. So gold has been has played fantastic. Central banks are buying a lot of trade tariff tension, a lot of Fed related Fed related Fed and US administration challenges, right? Gold is definitely going higher, but I think it's a little bit in a hype mode at the moment. Yes, it's basically closed at 3684. It can go to 3800. But whenever, so if you see the way it's going, even if it hits 3800, it's moving in a rising wedge sort of a formation. So even if it does not come down significantly, it has room to come down to 3500 to 3400. That's what I think, right? But gold, central banks are buying. There will be some impact. It has at the moment with the uncertainty about U.S. administration and Fed. Probably gold is one of the beneficiary, right? In the case of silver, silver is coming into the range. It's 43.05 as of yesterday. 44 is the level. 44 is the level which it failed last time. If it failed to break 44, 45, probably silver is also going into a consolidation zone. After the uptrend, consolidation before it decides to go higher or lower. So you see here, we have seen this sharp move, parabolic move, and then what happened? We dropped, we remain in the range for a while, consolidated before we go down. I don't think the way the situation is going that we'll come down to like something like 28 or 20, 28, something like 28. It looks very too good to be true at the moment. But the thing is, there is a possibility the upside may be limited. Now, everybody, I mean, at the moment, I am receiving a lot of calls in Canada from a lot of different friends. Said gold and silver is a tangible asset, buy it. Now, when this type of hype starts, when you start receiving calls that buy gold is a tangible asset, buy gold is a tangible asset, I go on the contrarian side. Again, I may be wrong. So, yeah, well, we'll see how it goes. Now, we will go into the crypto side. Now, crypto is the darling of retail investors, institutional investors, right? Everybody loves crypto these days, right? Now let's look at Bitcoin. This is the daily chart. Bitcoin had 109K high here. Then we had 112K high here. We have broken all these levels, right? So these are the previous highs. So whenever the previous highs are taken out, it comes to retest, which we have seen it here. We see the retest. We have seen the retest of this level here, right? 123 to 125K is the level where I still think that it's probably not going to break, and I'll give you my thesis on it. As long as it can remain between 125 to 105K for now, before it decides where it's going to go. Now, I'll show you the next chart that will open your eyes. I mean, I was also surprised when I saw it, but let's see. When I was preparing it, this is the monthly chart of Bitcoin. This is the kill line. Every time Bitcoin hit this line, drops significantly. Hit this line, drops a little, then retest this line, drops significantly. So look at this scenario and look at this scenario. We hit this line, we drop a little bit. We hit this line, and again, there is a high probability that we may see a larger decline. So a lot of guys, they are very much into cryptocurrencies, Bitcoins. Guys, do a little bit of research. I said, this is the high probability setup, but this is the kill line. Every time it has hit this one, either we have seen a decent drop or a larger drop. So just for your information. Let's go into the other currencies, Ethereum. Ethereum has 46 to 49, almost it hit almost 49 to 50K. For what do you call it? 4,900 to 5,000, 5K, 4.9K to 5K. And what happened here? We drop this one, we drop. As long as, so my ideal scenario is we will come down to 4,000. If in the case of bullish scenario, if it goes very bullish, then we will be, if we break, then we are going to 5,600. At the moment, I will stick with my ideal scenario. Let's go into XRP. Now, if you see XRP, this trend line has held XRP for a very long time. Once this trend line is broken, the parallel of this trend line, I mean, the next resistance was this level. We actually failed to break this level and we dropped further. So XRP, I still think as a crypto scenario, I think XRP is also in a consolidation mode. We'll see if it breaks on the downside or if it breaks on the upside, but it's in a consolidation. Okay, let's go to another one. Let's see, Solano. Now, beauty of Solano is Solano moves in a channel, drops in a channel, moves in a channel, drops in a channel. I mean, moves higher in a channel, moves higher in a channel. When it hits the top of the channel, it comes down to retest the bottom of the channel. When it hits bottom of the channel, it comes down to hit the top of the channel. We have actually tested the top of the channel twice. Now is Solano coming down to 220, there is a high probability. There is a very high probability. Right? So that's, I think, from my side, and I wanted to show you one thing before I open for Q&A. 1 second, guys. Okay. Let me bring this here. Guys, this is my website, twtlearning.com. You can go to here, about us. Okay. 1 second, did I click? Sorry. This is myself. You can find my bio. You click here, you will go to investing.com. You click here, you will go to fxstreet.com. So I have done a lot of stories for investing.com. I do most of the time the earnings. fxstreet.com, you will find me here. This is me. And you'll find I do a lot of economic indicators, gold and all. If you go to home, and if you go down, and you will see the testimonials from my clients. You'll please appreciate, go through it. These are the guys I have trained. I have trained more than 2,000 students so far. That includes institutional as well as the individuals. Mostly it's individuals and retail investors, right? I do podcasts with a friend of mine in New York. I do earning podcast. You can find all the podcast videos over here. This was the one I did a day on NVIDIA earnings, and my view was NVIDIA will drop. I said ideal scenarios, NVIDIA will drop after the earnings. So these are all podcast. You can find my YouTube, what do you call it? Let me go to Twitter. You can find my YouTube over here. Right. And I'll show you, and then I'll open it for, I'll just take 1 more minute, guys. So I produce every week, I produce US stock market probability maps. I look at 75 years of history. My research suggests that next 4 days, our sentiments are going to be bearish for the US stock market, right? And if we'll do a session on this one sometimes later this year, how to benefit from these. I have put some time on the video on YouTube. I have mentioned about how to benefit from these. And if you go here, I have started a new session on the training. You will find the details over here, right? These are the topic I covered: understand the market psychology, order flow, learn economic indicators, fundamental price action, stock options trading, futures trading, futures, and most of the market makers and larger institutions, they do hedge in futures and options, stock screening for short-term, medium-term, long-term investments, learn how to identify high probability trade setup, and everything comes down to risk management. So please feel free to reach out if you have any interest in this. I'm going to start a course from today, but I'll be offering this soon. And that will be basically in your time zone. This I'm starting my time. I'm doing it at 7 p.m., 7 to 10 p.m. Eastern time, which is very late for you guys. And this is where I said that now market is expecting 3 rate cuts in 2025. This was 5th of September, and Fed confirmed my view on 17th of September when it came up with the rate cut. Right? So please feel free to follow me. This is my YouTube channel. I have done about probably how many? 49 videos. Just recently started. It's very informative. You will find substance out of it. So here we go, and let's start a session on Q&A. So if you have any question, guys, please feel free to raise.
Thank you so much, Ali.
You're welcome. You're welcome.
Okay. For Q&As, you can raise your hand. I can open up the mic, or you can type in the Q&A section, or we have a chat open as well.
Guys, feel free to ask question. I'm here. I mean, if you have any question on what I have presented, any suggestion on what I have presented, please feel free to raise. This is your opportunity to ask. If you are, again, sorry, apologies. If you are a little shy and you don't like to speak in a group, you can always WhatsApp me. I am available. This is, let me go and let me 1 second. So guys, 1 second, go to
Yeah, I
TV.
think we have one hand raised.
Sure. I mean, if you're a shy
So,
type person, you can always, you will find my contacts here. Sorry, guys. Sorry, Salman. I'll address
no
that one.
problem.
My contact detail is here. This is my cell phone number. I appreciate WhatsApp or a text message. If you have any question, feel free to reach out to me. I mean, I'm very good at replying. If I'm busy, I'll not reply. I'll definitely reply to you in 48 hours. Right? Okay. What's the question, guys?
Okay, so I'm going to open up the mic for
Sure,
Amir.
sure,
He will say, okay.
sure, sure.
Yeah, Amir, your mic is open.
Hello, good afternoon. Can you guys hear me?
Yeah, yeah.
Yeah.
Yes, I mean, I
You
can
can hear
loud and
me.
clear.
Thanks a lot. First of all, thank you very much for, presenting this information. It's very useful.
Most welcome.
Um, I've got one thing I'm just looking into because, when I was looking at your charts and everything, it's very useful in giving a lot of information. In regards to the Fed is deciding to cut the interest rate.
Right,
I understand it's because of the unemployment at the moment. I think the America is facing.
right,
Um, this is maybe not relevant at the moment, we are speaking at the moment, but I think, when they're cutting the tariff,
right,
sorry, when they're increasing the tariff prices for the globally,
right,
they're not going to destabilize more economy for America because at the moment, what happening is when the export is being coming into the America,
right,
because the tax is going to be high,
right,
the affordability would be more difficult to, buy things. So
right.
is it the inflation's not going to increase further?
That is why there is a split in Fed. So Fed is looking at, so as I said, that Fed has two KPIs. One is to make sure the employment market is stable. The other is inflation is in control. So
Mhm.
this is the challenge. Employment market with the revision, there has been 900,000 job loss since March. After all those revisions, right? But on the other hand, if you see the core CPI, month over month, I think core CPI, this is it. So month over month is going higher. So you see, we had lowest core CPI, inflation in May, June, July, and August is higher. And that is the key challenge. And this time, what we have seen is the biggest rise since May 2023. That's why Fed has a split that some members believe that the rate should not be cut. Like some favors no cut, some favors tightening, and one favors 50 basis point cut. Now, the what of there is so Fed is doing their own function. US administration has their own challenges. US is a most debt borrowing country. So they raise treasuries to do their projects, to run the government. We will have I think in 2 weeks, we will have a very challenging scenario for the US government because they are going to hit the debt ceiling. If they don't increase the debt ceiling, the government will shut down. And I think Donald Trump said that in 2 weeks, we may see a shutdown of the government. So, what is the challenge of the government? The challenge of the government is they are borrower. They have to pay higher interest rate on their borrowing. They have $37 trillion of debt. Majority of them for this year, I mean, not majority of 37 trillion, they have most of their debt for 2025 is actually maturing in September. That's why Donald Trump and administration was actually very vocal about cut the interest rate and give us a big cut. But Fed has another challenge, inflation and tariff. As you said, when you have a trade war or tariff war, your cost of import goes higher, and that has been taken by, or that has been that goes to the consumer. And if I remember correctly, the producer price index in August was higher. Yeah, in August it was higher, 0.9%, or in July it was higher. That takes 2 to 3 months to shift it to the consumer. So that is the major challenge at the moment. Now, what it will do on the trade tariff side, that all depends. I mean, if you guys have heard, they have put a new regulation for H1B visa or HB1 visa, that anybody on H1B visa out of the country at the moment, if he wants to come back, has to pay $100,000. So things are actually not good for them as well as globally.
Mm. No,
Right.
that's understandable because I'm also looking closely with the Saudi economy and compared to the Britain as well because I'm basically based in UK. And
Really?
what we're basically hearing in the news at the moment is the US is heavily investing in the technology, and the deal has been accepted between the US and the UK.
Right.
I'm also was studying the Saudi economy where the CPI is dropping
Right.
dramatically. Apart from the housing and
Right.
the water, electricity, and fuel, which
Right.
saw the rise in
Right.
the CPI as
Right.
compared to the furniture, clothes, and transportation.
Right.
So, I mean, what do you see as when the America has decided to invest in the UK in the
Right.
tech?
Right.
What is the global and local uh, impacts we're going to see on that?
See, actually, if you say this trade war is, I will rebrand it or rename it, it's a technology war, right?
Mm,
US has been in the last 20, 30, 40 years was busy uh, in wars, right? Now,
mm,
in that, the benefit has been taken by two countries, and they are basically on the hit list at the moment from US administration. It's China and India.
mm,
This, in my opinion, in my humble opinion, I may be completely wrong. This is my opinion, that this trade war is all about China and India,
mm,
right? Now, again, US is good at research and developments. Where it comes to the say raw technology, semiconductors, everything, implementation of that technology, the rest of the world is very good. Now, the technology is not only designing or developing the semiconductor chips, it's all about software application.
mm,
Software application, the world is quite ahead of, I mean, not, I will not say ahead of, but world is actually at, if not ahead, at par with the US developers. And US developers, most of them are international. They are not actually US original. They are immigrants, or by naturalization, they are US citizen. Right? So the pact between, I think US will go close to UK. It makes sense than going close to Europe,
mm.
right? See,
Yeah,
I mean, it makes sense for them because Europe technologically is, I think, because UK, if please correct me if I'm wrong, UK has been a service industry for a very long time.
it has been. Yeah, that's
Yeah.
true.
Yeah,
Yeah,
and Europe has been in the, so they have given the services, but they took the technology. They worked on
yeah,
technology,
manufacturing side. Yeah,
manufacturing side,
yeah.
right? So it makes sense for the US to go towards UK, join hands, and
Mm,
get the benefit, and then turn the UK economy into an exporting economy
mm.
rather than services economy. And
Correct. Yes. Yeah.
I personally think that this is a paradigm shift globally, and now
Mm,
everybody's scratching their head. Are we going in the wrong right? Were we going in the wrong path in the past? Should we correct our path? Like in the case of Canada,
mm,
Canada had 75 to 80% export to the US. Now they're scratching heads,
mm,
right? So a lot of global paradigm shift is going on. What will be the outcome? How will be the outcome? I am not sure. But things
mm,
are going to be challenging where it comes to thought leadership, where it comes to political leadership, where it comes to technological leadership, where it comes to employees. It's going to be a paradigm shift. We will have to keep upscaling ourselves. And one of the point I even speak to a lot of guys, there's guys, I mean, those who are sitting in GCC, guys, I say that you are sitting at the right place at the right time. We are like you, myself, we are sitting in the developed economy. We are facing the heat, right?
Yes, it's
Hmm.
more riskier here at the moment.
Exactly, exactly. And the
Yes.
other thing I tell everybody in North America, this guys learn more skill set, find another way of generating some revenues for yourselves.
Mm,
Second part-time job or part-time revenue for yourself, and learn about the financial market, because next is all about financial market. If you do
correct.
not
Yeah.
understand economy and financials, even if you are the best surgeon in the world, survival
Mm.
will be difficult.
It would be difficult. Yeah, no, absolutely. Because this is something, when I said I'm looking closely with the Saudi Arabia economy,
Right,
what I was studying was the CPI dropped was a lot dropped in furniture and home equipment side,
right,
including the clothing and footwear and the transportation.
right,
But what I'm seeing stabilization is in the restaurant, hospitality, telecom.
right,
This is the places where it's very stable.
right,
Um, but I agree with you what you said. It's we're sitting in the risk at the moment.
right. And the other thing is, I think in Saudi Arabia, the home and the furniture going down is the consumer spending.
Mm,
So, right, like Saudi Arabia had introduced VAT a couple of years ago, and then consumer spending is also going down. That is one of the things. So, what area we are looking at is where the consumer spending is going down. Plus,
where's the
cost of
rent is
living.
increasing?
Yeah,
Yeah,
cost of living is going higher.
that's right. The rent is increasing. We're seeing the rent and the water and electricity
Yeah,
and gas,
yeah,
including the fuel, is going up.
exactly, exactly, exactly.
Thank you for,
You're
this
most
discussion.
You're most welcome. You're most welcome.
Yeah.
I mean, I'll
So
be happy to, as long as Salman can get me every month, I'll be happy to come up with some good ideas. I mean, I do a lot, and a lot of guys research. I do, if anybody from the guys from the corporate, if you need any advisory services, I'm available at an individual level. I'm available, and I do a lot of actionable stuff for the U.S. stock market, because U.S. stock market is $65 trillion market. So that's why I do a lot of research. I used to do GCC markets as well. Anybody has an interest in GCC market, please reach out. If there's any question, anything, I am more than happy to take it.
yeah. Yeah, thank you so much, Ali. So next question we have is
Most welcome.
it's about Saudi. Would the VN 2030 diversifying Saudi Arabian's economy away from oil, which leads economic indicators should investor monitor most closely to assess the long-term growth potential? Like the question is, should investor monitor most closely to assess long-term growth potential?
So there are two indicators which you can keep an eye on. Crude export. So if the economy is diversifying from oil-based economy to taking a paradigm shift into different sector, technological. There's been a lot of improvement there, and look and keep an eye on foreign inflow. I mean, if there, how is the foreign inflow going on? I mean, I tried to find some indicators last night. Some of them have not been updated since December. So actually, I mean, if you guys have, I mean, I looked on whatever resources I have. If some of you have Bloomberg or Reuters, you can check it out over there. Keep an eye on foreign inflow and crude export. Crude export, I know it's been going down. It used to be, I don't vaguely remember what was the number, but it's going down. Now, in the case of the projects going on, the projects are actually all heavyweight projects, Neom, Red Sea, and all those, and they're trying to shift the economy, which in a way they have been successful, but they are still investment hungry. They need a lot of investments, right? Uh, I'll keep an eye on foreign inflows, not on the stock market or Tadawul. I'll be looking at where the what do you call it, into projects and companies. But most of the time, what I have seen with my experience while I was there, most of the company, they want to take the business from Saudi Arabia. They don't want to set up their businesses in Saudi Arabia. And I think they introduced a very good initiative for 2025. Those who are dealing with government, semi-government, they need to have their regional office in Riyadh or Saudi Arabia. Please correct me if I'm wrong.
Yeah. Yes, you're right.
So I think, I mean, it's going, see, whenever there is a paradigm shift is something when you're taking a U-turn, when you're driving and you take a U-turn. If you take the U-turn on fifth gear, there is a 90% possibility the car will skid. Paradigm shift will always be slow and gradual. You have to be very careful when you're taking it. But once you take the U-turn, you can accelerate the speed. So at the moment, the paradigm shift 2020, 2030 vision is ongoing. And what I mean, when 2030 vision was actually proposed, a lot of economists were very pessimistic about it. But what things have changed, the way things have changed, Saudi Arabia has really proved themselves. I mean, just for the example, I was speaking to a friend of mine. I mean, just for the example, and we were talking about the immigration system, and I said, there's one country on the earth, when they click on the computer, they will tell you how many expats are in the country, how many expats are outside the countries, how many nationals are in the country, how many nationals outside of the country, in which part of the world they have traveled to, and that is Saudi Arabia. That is Saudi Arabia. And the guy was like, I said, yes, this country has, I mean, amazing e-commerce growth, amazing e-commerce growth. In Canada, I cannot apply for I mean, for my passport electronically. I have to go physically. You can do, in Saudi Arabia, you can do that. Yeah. So yeah,
Yeah.
if there's any other question, I'm happy to take it.
Yeah, I think two more question. Then the next question is, how do you see regulatory developments in Saudi Arabia and the wider GCC shaping institutional adoption of cryptocurrencies in next 4 to 5 years? It's about crypto in GCC.
See, I mean, I think I would say that if you take UAE initiative in crypto has been much advanced than even US. And I think US current administration has taken those steps to bring their what do you call it? I mean, so if you go in the regulatory side of crypto, UAE had been very, very open and vocal. And I think most of the crypto traders and mining companies, most of them, they want to move to Dubai. Most of the hedge funds, they are moving to Dubai. I think that was one of the initiative which the current US administration has taken. Now they're following their footsteps, and I think they want to become the leader. And so I still believe, I remember when I was talking to Sama at some point, that was 2016, 17. They wanted to introduce Ripple for the instant transfer of GCC currencies, wire transfer, I mean, replacing the wire transfer, if I remember it correctly. So I would say that the adoption of any new invention or crypto, I think GCC will lead. This is my opinion. Yeah.
Okay. So one question is how the Fed is normally linked with GCC interest rates. Like, are they really linked or not? I mean, for example,
Yeah.
if I say from my side, I'm just adding, if I say normally US and Saudis, their interest rates are linked. So how
Right.
about the other economies in GCC?
Well, actually, all those peg currencies, what I have seen that whenever there is a change in interest rate in Fed, SAMA follows. If I'm not wrong, even UAE follows, Kuwait follows. Correct me if I'm, please correct me, because I follow most of the time North America, and when it comes to GCC, mainly Saudi Arabia. But all these peg currencies, they follow Fed. So any increase or decrease, they do not want to have a larger spread. I mean, the difference between the interest rate between dollar and Saudi Riyal, or dollar and Bahraini dinar, or UAE, because of the flight of capital. So they do not want UAE, I mean, Saudi riyal to be sold against dollar, and then the funds get into US dollar deposits or US dollar denominated investments. So I'm pretty sure, I'm sure about Saudi Arabia. Rest of the, I think one of them was, um, I think semi-packed or something. I'm not sure which was Kuwaiti dinar, if I remember. Right. But yeah, because of oil proceeds, they sell oil in dollar. They need to be pegged.
Mm. Okay. I think Ibrar, you raised your hand and then you lowered. So, do you have any question? Okay. Yeah. One hand is
Sure.
raised, which is Ibrar. I'm allowing you to talk.
Sure.
Yes, Ibrar, you can speak.
Assalamu alaikum.
Well, Islam.
Sir, just I joined, but I was a little bit late. I couldn't follow you 100%. So you given your mobile number, I couldn't get it. Which country
Okay.
code it is there?
+1.
And secondly, sir, it's just know your about yourself little bit. If you can introduce me, so I can reach out to you. Thank you.
Sure. Please see the screen. I have put my details on the screen. So you will find
So,
my contact details. Can you see the screen? Am I sharing the screen?
Yes, on the bottom you can find
Yes.
Ibrar,
This
the
is
+1.
here.
sir, learn to invest, trade like professional.
Yes. You see here, admin at
Thank you, sir. I will
twlearning.com.
follow
Yeah.
you.
Yeah. And then you can go on the presentation. I think I have it, all my details here. Yeah. So +1 is the
So
country code.
if I would find something wrong, I will continue and get update from Mr. Sulman. Thank you very much,
Sure.
sir. It's nice to have
Thank you very much, guys.
interactive session.
Okay.
Thanks a lot.
Okay, I think we had a wonderful session today. It was more interactive.
Thank you very much.
So far, I believe no one is raising further hands. So I think let's conclude the session, and I have to give some closing remarks.
Sure.
So I wanted to extend my sincere appreciation to your engaging presentation, Ali, during the today's webinar. And your insight on this topic were particularly valuable and have given us a fresh perspective on the interest rates and the cryptocurrencies. And regarding the participants, your presence and your contribution were truly appreciated and added great value to our discussion. So thank you so much, everyone, for attending this event today. It was a pleasure to learn from you, Ali, and I look
Thank you.
forward to apply and to apply what I have learned today. So thank you so much, and have a good evening, everyone in the regions.
Thank you very much, Salman. Thank you very much, everyone, for this fantastic webinar and very intelligent question and Q&A session. So we'll try to continue. Let's stay in touch with Salman, and then we'll do something. There's another event. We mentioned that there's
Yes,
something.
yeah.
Yeah. So we'll
Yes,
see.
yeah, sorry, I forgot to mention that there is another event. It will be, I believe, a different topic, but it's I can say that is also an essential topic to all the accountants and the finance professionals, and that is arranged on 4th of October, again Saturday 6 p.m. So that topic name is Project Management for CFOs. So we have a very experienced a speaker for that topic as well. So looking forward to all of you guys. Thank you so much, and bye bye.
Thank you, guys. Take care. Have a nice one.